Yes, good evening, students of CPA. So this is your tutor, CPA Dunochoi. So it's another great evening we meet for this session. I think I updated you earlier that we were supposed to have this session today. That is on various social media platforms. So of which I said that we will be looking at our sitting paper, that is for the financial reporting and analysis. And to be more specific, question number 2. So question number 2 was concerning published financial statements. That is according to International Accounting Standards 1. How you are supposed to prepare the published financial statements. So, which are these statements? Even before I do that specific question. So remember that under IS1, we always prepare statement of profit or loss, statement of financial position, and we have a cash flow statement. So statement of a profit or loss, statement of financial position, beside other statements maybe, which supplements the 3 major, like now the aspect of a statement of changes in equity. But the major statements you need to know under S1, there are 3. The statement of profit or loss, statement of a financial position, and the cash flow statement. So when you are preparing the statement of profit or loss, remember that there is rules to follow. The same way when you are doing the statement of financial position and cash flow statements. So I have done many questions based on the previous videos, because under this channel, for the AFR, Advanced FR, Leadership and Management, Financial Accounting, in total I have done more than 100 videos. More than 100 videos, even if some of them they are under my private account, which I always give out to my students who have subscribed to the Zoom classes. Let's look at the question for today. Let's look at the question for today. That is April 2024. Financial reporting and analysis, question number 2. Question number 2. So I have a hard copy version of the paper, but already I have shared the link under the chart. So there is a link which I have shared under the chart. That link, you can be able to use it to get the relevant past paper I have. So there is a link under the chart. So you just click the link. It will take you direct to where this past paper is for April 2024. So I will be looking at this question number 2. So they were saying that the following. So I think you have downloaded for the guys following. And even before I start, what I can request is that you share the link to these live sessions to other platforms, so that we can have a good number joining. So before I start, in the next around 30 seconds, what I can request is that you share the link to this live session to other platforms, the way I'm doing in the next 30 seconds before we start. So there's various groups for KASNEB where I'm a member. So what I can do, I can share. So I can share. So I can share in the next 30 seconds before we look at this question number 2 from financial reporting and analysis. So CPA, so I look at the groups of CPA where I'm a member. So I think that is enough. That is enough. So we can continue. So for the guys who have joined, I'm saying that I'm doing a financial reporting and analysis April 2024. April 2024 question number 2. Question 2. So question 2 is under IS1. IS1. So I've said that I've shared already the question as a link under the chat. So you can download it, then we go through it, then we do it very fast in the next around 1 hour. So the following trial balance was extracted from the books of KASNEB Remittent as at 31st March 2024. So we have the ordinary share capital, share premium, retained profit, 8% loan note, we have revenue, cost of sales, distribution cost, administrative costs, inventory, trade receivable, trade payable, bank balance, deferred tax, property. So they have said property in brackets, there is land. Remember property stands for? So property stands for land and what? Land and building. So the total value of property there is 457,000. So already I've given you the value of land, 87,000. So meaning that if you take 457,000 minus 87,000, the balance will be for this one, building. The balance will be for the building. So property stands for land and building. Property stands for the land and building. So there is a plant and equipment at cost. Plant and equipment at cost. We have motor vehicle. We have fixtures and fittings and the accumulated depreciation. Additional information. The guys who are joining, we are doing this question, April 2024 question 2, financial reporting and analysis. The question is shared as a link you can download under the chat. So let's look at additional information. So during the year ended 31st March 2024, the company sold off an item of plant with a carrying amount of shillings 46,200,000 for cash proceeds of 42 million. The disposal proceeds were credited to the suspense account. So remember that there was a plant with a carrying amount of 46,200. 46,200. It has been sold at what? At 42,000. In the year they made a loss on disposal. It's a loss on disposal. So the disposal proceeds were credited to the suspense account. Then they went ahead to say that plant and equipment is depreciated at the rate of 12.5% per annum on a reducing balance basis. Full year depreciation is provided in the year of asset purchase and none in the year of disposal. Depreciation and any gain or loss on disposal of plant and equipment should be classified under the cost of sales. That is what I will do. Remember that when you are doing the statement of profit or loss, expenses are classified based on various functional heads. So expenses are classified either under the cost of sales, administrative expenses, distribution cost, or under finance cost. So expenses are classified based on those functional heads. Number one, I've said some expenses will go to the cost of sales, some to the admin expenses, some to distribution cost, and some to finance cost. That is why right now here, when they say that there is depreciation for the plant, they went ahead to say that that depreciation and any gain or loss on disposal of the plant and equipment should be classified under the cost of sales. Number 2, depreciation on other non-current assets is provided and allocated as follows. We have the building, motor vehicle, and the fixtures and fittings. So building 2%, straight line, you classify it under administration. Motor vehicle 25%, straight line, it goes to distribution. Fixtures and fittings 10%, straight line, under administration. Number 3, the 8% loan note was issued on 1st April 2023 and will be redeemable in 3 years' time at a substantial premium, which gives an effective interest rate of 10% per annum. So for the guys training, I can see 10 students following. So we are doing financial reporting and analysis, April 2024. That is sitting question number 2. That is under S1. So I've said that I've shared the question under the chat, so you can be able to download it so that you can be able to follow. So, and beside the live sessions, you always know that I do Zoom classes. Like now today from 8 p.m., I will be having a Zoom class for the same paper. That is for the financial reporting and analysis. For you to join, you know that for that one, you have to talk to me directly. You have to use your WhatsApp or call me. We make an arrangement on the way forward. So let's read note 4, then we do the presentation. Number 4, they said that the tax provision for the year to 31st March 2024 was determined to be a tax credit estimated at 15,700,000. In addition, at 31st March 2024, the tax base of assets and liabilities exceeded their carrying amounts by 121 million. The income tax rate applicable to KASNEB Limited is 30%. So the first thing they needed the students to do is a property, plant, and equipment movement schedule for the year ended 31st March 2024. So remember, property, plant, and equipment. Property, plant, and equipment movement schedule. This one is based on fixed assets. Number 2, statement of profit or loss for the year ended 31st March 2024. So let's first do that, the movement schedule. Property, plant, and equipment movement schedule. So this is KASNEB Limited. KASNEB Limited. So you can say KASNEB Limited. So we talk about property, plant, and equipment. Property, plant, and equipment. Property, plant, and equipment. So we talk about property, plant, and equipment. Asset movement schedule. Asset movement. It's all about fixed assets. I can even be specific. Fixed. The property, plant, and equipment, these are fixed assets. So fixed asset movement schedule. We need a fixed asset movement schedule. So which are some of the fixed assets we have? We have various assets here. So the first one was property, which is land and building. So I can separate, or I just say property. So the next one was, other than property, there was plant and equipment, then motor vehicle. Plant and equipment. We have the plant and equipment. After plant and equipment, we have motor vehicle. Then finally, there is one called fixtures and what? Fixtures and fittings. Fixtures and what? Fixtures and fittings. So we can extend that way. So we are going to present that way. So the asset movement schedule, property, plant and equipment. So we have the property, plant, we have a plant and equipment, we have the motor vehicle, we have the fixtures and fittings. So what we do here, we start with the cost of those assets. So as at the start of the year, the cost of those assets as at the start of the year. Remember that our financial year was ending on April. Was ending on April or March. Our financial year was ending on March, not April. March 2024. So meaning that the financial year starts on April 2023. It starts on April 2023. So the cost of those assets, cost asset April 2023, when we are opening the year. So those are the values given under the trial balance. Those are the values given under the trial balance of which 7,000. Remember, this one you could have separated. You say rand then building, but at the same time I can say property. You know it's rand and building. Then we have 360,000. These are the values from the trial balance. 82,000. Then we have 64,000. 64,000. Then after that, the next thing you consider is all about now under the trial balance. You can see there is this accumulated depreciation. 1st April 2023. So we have stated the values of the asset as at 1st April 2023 according to the values given in the trial balance. Then there is an accumulated depreciation which must be deducted. Deduct that accumulated depreciation. Accumulated depreciation. Accumulated depreciation 1st April 2023. So it's given direct under the trial balance. You have the question. So I've said the question is under the chart. So you can be able to download it so that you can follow. So this is 162, 800, 119. So 119. So this is 119, 400. This is 41,000. Then finally there we have 25,600. 25,600. Remember that this is cost minus accumulated depreciation. When you say cost minus accumulated depreciation, you have what we call, so cost minus accumulated depreciation is all about carrying amount. The carrying amount, or we call it net book value, or net book value. So we are getting a carrying amount. We are getting a carrying amount of, so carrying amount, these are as at the start of the year, as at 1st April 2023. So various carrying amounts there. So we can go, we can get those values. I was speaking in my calculator. So 457,000 minus 162, 800. So this one is 294, 200. 360,000 minus 119, 400. So this is 240, 600. The net book value as at the start of the year. This is 41,000. Then 64,000 minus 25,600. So this is 38,400. That is 38,400. Then after that, remember that before even I go ahead to deduct the depreciation for the year, I need to consider if there is any disposal. In addition, information number one, during this year, there is a disposal which occurred of the plant. It was at a carrying amount of 46,200. They made 42,000. So that one must be deducted. So deduct disposal. So here you raise disposal. at carrying amount. At carrying amount. So disposal is for the plant. So this one is 46,200. We don't have disposal there. We don't have disposal there. We don't have. So which values do I have here? So this one will meant to be 294,200. This one is so 240,600 minus 46,200. So this is 194,400. This is 41,000, and this is 38,400. Then now we head to deduct what? Depreciation for the year. Then now raise depreciation for the year. Depreciation for the year. So the first what? The first asset to depreciate. Remember here under property, the only asset to be depreciated is building. We don't depreciate land. So the depreciation I will be deducting here is for the building. So building. So for the building you are told 2% on a straight line. So straight line means that you take the depreciation times the cost of that building. And you know that you are given the total value for property. You are told that the property is given at 457,000, of which land was at 87. Land was 87,000. So if you deduct the land from the total value, you get building. You get your building. So 457 minus 87. So this is 370,000. So apply 2%. So 2% of 370,000. I will be able to get what? 7,400. That is what I will deduct here. 7,400. The next one is the plant and equipment. So plant and equipment. So for the plant and equipment, additional information number 1. Remember they mentioned that plant and equipment is depreciated at what? 12.5%. But there's a sentence where they say full year depreciation is provided in the year of asset purchase and none in the year of disposal. Meaning that I will charge my depreciation on the 240,600. I will not consider the 194,400 because they said I will not consider the depreciation. I will not consider the disposal. Sorry, because they said full year depreciation is provided in the year of asset purchase and none in the year of disposal. So this is 240,600 times 12.5%. So this is 30,075. So this is a deduction. So 30,075. And after that, we talk about motor vehicle. Motor vehicle was depreciated at 25%. 25% on straight line. The cost of motor vehicle is 82,000. So 82,000 times 25%. So this is 2,500. So motor vehicle depreciation. So motor vehicle, that is 2,500. That is the 2,500. Then finally we have fixtures and fittings. So for the fixtures and fittings, it was 10%. 10% times what? 10% times 64,000. So that is 6,400. So 6,400 there. You deduct. So that we have our carrying amounts at the end of the year. So carrying amounts. So remember that it's carrying amount as at which date? As at the end of the year, which is 31st March 2024. 31st March 2024. So you can say 294,000, 294,200 minus 7,400. So this one is 286,800. 286,800. 194,400 minus 30,075. This is 164,325. 41,000 minus 2,500. So this is 2,500. Finally, 38,400 minus 6,400. So this is 32,000. 32,000. So this one was having how many marks? So the movement, 4 marks. How are you supposed to get these 4 marks? Let me show you. I can show you this. How they were marking the movement schedule so that you get your 4 marks. It's very easy. It's very easy. In terms of getting the 4 marks, it's not difficult at all. So I can be able to tell you how this one was marked. How was this one marked? So remember that I said like now this one you could have separated. If we were having, if we decided to say land and building, we could have added 2 columns. So this one was 2 marks. So 2 ticks. Another tick. Another one. Another one. So this one is another one. Here, here, here. Then they went ahead to mark these. So they needed any 8 ticks. Any 8 ticks. So that they multiply with what? Half. You get your 4 marks. They multiply with half, you get your 4 marks. So 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 3, 4, 5, 6, 7. No. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So out of 13 ticks, they needed only 8 correct. They multiply by half, you get your 4 marks. You get your 4 good marks. Students of CPA, how it's easier to do it. But this is only if you join my sessions, you follow these live sessions, and use my videos well. So there's a Zoom classes I do. There's Zoom classes I do. They are ongoing already. They are ongoing. So there's classes I do during the evening hours. Like now today, 8 p.m., we have a FAR, financial reporting, 8 p.m. to 10 p.m. So you can be able to reach me out through this number. So you can contact me through this number. So this is my contact. So that we can agree on the way forward. Meaning that on the way of joining, so you have to be added to the WhatsApp group. That is after we have agreed how much you have to pay, which is a very small amount. So let's do Roman 2 of the same. Statement of profit or loss. So before I do the statement of profit or loss, there is some workings I have to do. Some workings. Some workings must be done. Right now, number 1, there was a loss on disposal. Loss on disposal. So the loss on disposal, remember that there was that plant which was sold. It was having a carrying amount of 46,200. It was sold at 42,000. So they made a loss of. So 46,200 minus 42,000. They made a loss of 4,200. Or they say that any loss in that paragraph 2 of note 1 they said that any loss or gain of the plant and equipment should be classified under cost of sales. So to cost of sales, to cost of sales, to cost of sales, to cost of sales. So this is working one. Number two, for depreciations, we are done with them because I can see we have depreciations here for the year. But that one I am done with the depreciations. Note 3, there's an 8% loan note. Loan note. The value of this loan note from the trial balance, the 8% loan note is 120,000. Is 120,000. 120,000. That is the loan note. The value of this is anyway, I can say the value is 120,000. Then they went ahead to mention that in note 3, and it's redeemable in 3 years. It will be redeemed in 3 years' time at a substantial premium, which gives an effective interest rate of 10% per annum. So the effective interest rate is 10%. So meaning that the interest for the current year, which is interest, will be based on the effective interest rate. So interest is just 10% of the 120,000, which is 12,000. Just like that. Number 4 is concerning tax. Or they said tax provision for the year to 31st March 2024 was determined to be a tax credit. Estimated at 15,700,000. In addition, at 31st March 2024, the tax basis of the assets and liabilities exceeded their carrying amounts by 121,000. That is 121 million, not thousand. Income tax rate applicable is 30%. So here, note 3, we talk about tax. So we will say that income tax is equals to current tax. We check at current tax plus minus increase or decrease. Increase or decrease in deferred tax. Increase or decrease in deferred tax. Plus tax what? Under provision for the previous year. Under provision from previous year. Under provision from the previous year. Plus tax over provision. Plus the tax provision. But tax over provision from again the previous year. Tax under provision previous year, tax over provision previous year. If we look at this question of ours, they said that looking at the tax provision for the year to 31st March 2024, which is the current year under consideration, was determined to be a tax credit. So we have a tax credit at 15,700,000. In addition, the tax basis of assets and liabilities exceeded their carrying amounts. So remember, when we are doing deferred tax, we say that deferred tax is equals to what? Temporal difference times tax rate. Temporal difference times what? Tax rate. Of which we have types of temporal difference. We have the taxable temporal difference, whereby the carrying amount is greater than the tax base. We have deductible, whereby the carrying amount is less than the tax base. Meaning that under deductible temporal difference, the tax basis of the assets or liabilities exceeds their carrying amount. And that is what is given here. So we have a deductible temporal difference. So meaning that I can be able to get a deferred tax asset. So deferred tax asset. Deferred tax asset. So deferred tax asset will be, so this deferred tax asset will be, because already we have a deductible temporal difference of 121. So I will just multiply with tax rate. So we have a deductible temporal difference, where because the tax basis of the assets and liabilities are greater than the carrying amounts. And I've said that when the carrying amounts of the assets or liabilities are greater than the tax basis, that is a taxable temporary difference, which leads to a deferred tax liability. So this one is all about 0.3 times 121,000. We get 36,300. So, and this one is as at which date? So this deductible temporary difference which was provided was as at 31st March 2024. So this is as at end of the year, 31st March 2024. So we need to check increase or decrease in the deferred tax asset. So I need to compare with a deferred tax asset. I need to compare asset as at which date? As at the start of the year, 1st April 2023. So the one from the trial balance. As at the start of the year, the deferred tax is 33,000. So 33,000. And at the end of the year is 36,300, meaning there is an increase of so 36,300 minus 33,000. So this is 3,300. So meaning here I will come and say we have a tax credit. We have a tax credit because that is what they said in that additional information. So the income tax credit will be the income tax credit will be the one for the year. We have the one for the year, and for the deferred tax. For the year was for the year is the 15,700. 15,700. For the year is 15,700, the one given. Then for the deferred tax is 33,300. So if you sum up 15,700 plus 33, so this total will be 19,000. So we continue. So I've said we have an income tax credit of 19,000. So the one for the year, this one is given under additional information number what? Additional information number 4. Then this we have computed for deferred tax. So if we sum up the two, we have 19,000. So finally, the last working is all about the classification of expenses. Classification of expenses based on their functional heads. So statement of expense allocation. Statement of expenses allocation. Expenses allocation. Statement of expenses allocation. So remember that expenses must be classified under cost of sales. So we have admin, and we talk about distribution. For the finance cost, it's only the interest. And we know that the interest is this one. Interest is 12,000. We don't have to include the column for finance cost. No. It's only interest which will be considered. So as per trial balance, so as per the trial balance, cost of sales, the cost of sales provided here is this one. That is the cost of sales. Distribution is 209,900 or what? 209,900. We have admin of 258,600. Then we can go ahead now to classify some of the expenses which are here under the functional heads. That is under the cost of sales, admin, and distribution. Most of them you are guided how to distribute. Like now from note 1, there's that loss on disposal. This one. Loss on disposal. Loss on disposal of the plant. So loss on disposal of the plant, they said we classify under the cost of sales. Then we have depreciation also for the plant and equipment. Depreciation, even depreciation for plant, even that one in note 1, paragraph 2. Depreciation on plant and equipment. They said that we classify under the cost of sales, and this is this one here. 30,075. The next note 2, depreciations on building. So I can say depreciation. Full colon. Number 1 is building. So this one they were specific that it goes to admin. For this building, it goes to admin. For plant and equipment, we are done with it. Motor vehicle. For the motor vehicle, it goes to distribution. It goes to distribution, motor vehicle, 20,500. Then for fixtures and fittings, so for fixtures and fittings, this one goes to admin, 64. Up to that point, there is no another expense. As I said, for the finance cost, we have only interest. This one, the interest on the loan. We have the interest on the loan. So we can get the total. So this is 13. So we have 13. So 13 what? 0,0500 plus 42,000 plus 30,075. So this loss on disposal was 4,200, not 42,000. 4,200. Sorry for that mistake. Delete. So 1334,775. Then we have 258,600 plus 7,400 plus 6,400. So this is 272,400. 272,400. Then finally for the distribution, 209,900 plus 2,500. So this is 230,400. Once you are done with this presentation, it's like we are done with the question. Once we are done with these workings, it's like we are done with the question, because now the next thing is just the work of copy and pasting. In terms of presenting that statement is the work of copy and pasting. So we say current limited. So statement of what? Statement of profit or loss. Statement of profit or loss. So that is for the year. For the year ended 31st March. It was 2024. So we say a shillings in thousands. So we start with revenue. So revenue is direct, it's given in the question. So the revenue is revenue, that is revenue is 1783,800. So that is the revenue. 17. Then less cost of sales. This one is based on working we have done. So we copy from here 134. That is 1334. 775. So up to that point we have a gross profit. A gross profit. So 1783,800 minus 1334. 775. So this is 449,025. Guys, I can see many guys are following. So you can be giving me these values under the chart. I will be able to see. Like now, my brother from Rwanda, I can say you are saying thanks, Edwin. So welcome, my friend. So 449,025. That is the gross profit. The now expenses, we talk about admin. There's no income. You could have added income to the gross profit, but we don't have any income. So we raise expenses. So we have the administration cost. Then we talk about distribution cost. So the admin is 272,400. And this is 230,400. What do we have? So if I minus 272,400 minus 230,400. So this is a loss. Yes. So this is a loss. So here these Qn2 limited, they were operating a loss. Loss from operations. Loss from operations. So this is 53,775. 53,775. So it's a loss. Loss from operations. Then there is another one, another expense we raise, which is finance cost. Remember, finance cost was 10% of the loan. It was 120,000. We got 12,000. 12,000. So here, if I add, I minus 12,000. So that is 65,775. So that is a loss again. A loss before tax. Remember, we had a tax credit. We did the working. Had an income tax credit. Income tax credit of 19,000 from the workings. We did our working. So income tax credit. Remember, credit you add. It doesn't reduce your profits. Instead, it increases. So this is a tax credit. Tax credit, income tax credit. So plus 19,000. So at the end, we can be able to get a loss of 46,775. So loss for the year. So this company was operating at a loss for the year. A loss for the year of 46,775. So that is a loss for the year. So that is what they needed in this question of April 2024. Question 2B. 2A, sorry, not 2B. 2A. Because 2B concerns deferred tax. And that one will be done tomorrow. So for the B part of it, we have done A, IS1. So we have done the asset movement schedule, how you are supposed to present the asset movement schedule, and at the same time the statement of profit or loss. So 10 marks. So this one was having how many marks? For the statement of profit or loss, it was having 6 marks. Again, I can show you how you are getting these 6 marks. As per the examiner, which is KASNEB, as per the examiner, how they were giving that 6 marks, I can be able to tell you. So this one, it was easier. So they were marking this way. So this way. So you see that. So 6 marks, they needed any 3 ticks. Any 3 ticks, they multiply by 2. You get your 6. Any 3 ticks, they multiply by 2, you get 6. How many are these? 1, 2, 3, 4, 5, 6. So you could have scored any 3. Like now, finance cost, that is free. Revenue is free. So you needed 1 more. You see, revenue is free. Finance cost, you could have scored. Then one of the computations you could have done, one of the workings could have given you another mark so that you get your 6. Plus the 4, you are at 10. So when we meet on our session, on our next session, I will be doing part B of that question, which is International Accounting Standards 12, the deferred tax. So they were asking the student to do what? Sorry. So they were asking the student to determine the deferred tax liability on 30th June 2023, 10 marks. That one will be on our next session. But now, if you need to attend more of my sessions, students of CPA, I have been here from time to time telling you that come to my Zoom classes, come to my classes. I don't charge a lot of money, so I don't exploit students. I always give you a friendly cost. So what you need to do is all about call me, WhatsApp me through this number. Let me personally I do financial reporting, advanced financial reporting, leadership and management, and auditing for the intermediate. Then I have partnered with other lecturers whereby we can be able to cover the other remaining units. But personally, when you come in, expect me to take you through financial reporting, advanced financial reporting, financial accounting, auditing, leadership and management. Thank you for your time. Thank you for sharing this video to the other platforms and continuing doing that. And at the same time, without forgetting, many of you have not subscribed to this platform. You just come in, you watch, you go. Subscription is free. So before you log out today, make sure that you subscribe to this YouTube channel. And at the same time, refer your colleagues to this platform. And at the same time, tell them that there's a guy called CPA Qn2 who does Zoom classes in the evening hours. That is a very, very convenient time for the working class and other students. We have come to the end of the live session today. See you tomorrow when I will be doing the financial reporting and analysis. Question number 2, part B, whereby you are needed to do the presentation of to determine, not even presentation, to determine the deferred tax liability. Deferred tax liability. That is from IS-12, deferred tax. Asante sana. I can see Duncan Okeji saying, thanks, mwalimu. Good job. Asante sana. Karibu Duncan.